Good afternoon and welcome everyone to the trading webinar, the Trading Success Blueprint, the Beginners Online Trading webinar. My name is Danny and I will give you the webinar today. Let's begin. Let's first understand how the webinar is going to happen. The first part will be more of an introduction to the company and the services we have here in this facility. The second part will be more practical. We'll go through the basic essentials for trading, which will be the majority of the webinar. And the last part will be analysis if we'll have spare time for that. It's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Furthermore, the webinar is recorded. So even if you've missed a part, or you had to perhaps to take a break, you can still review the webinar on our YouTube channel. So all you have to do is just to go to YouTube to find our channel Ava Trade, and then you can find all of the recorded content there. Not only the recording of this webinar, but obviously there are other webinars as well, which I would recommend you to check regardless, as this is free content and it's extremely useful. Okay, let's get our lovely notepad right here and we will jot down the things that we need. Okay, so to begin with, as many of you know, we are a regulated company. We have many licenses worldwide. In case you got a query or a question, you can find here at the bottom left our customer service. You can communicate via the chat or the WhatsApp, whatever you prefer. And if you are using a different interface than this being the web trader, okay, if you are using a different interface and you would like to directly contact our customer service, you can contact them through this email. Okay, this is regarding the customer service. Regarding the trading side, we can assign a senior account manager that can assist you with the trading side. So if somebody doesn't have enough experience or you're unsure of what you're about to do, you can ask for a senior account manager to assist you with the account. And if you don't have one, you can ask the customer service to assign one, depending on your eligibility after you've made a deposit to your account. Okay, so we have customer service for customer service, senior account manager for the trading side, and as I said just a moment ago, the platform that we're looking at right now is called the web trader. Also, we have the trading app, so this is the desktop version, but we have the app as well. In the app it looks similar, but you don't have the all the features you have here. Besides that, we also have the regular platforms, MetaTrader 4 and MetaTrader 5. Okay, and we also have Ava options and Ava social. Okay, a few things about Ava social. So this is because this is classified as webinar beginners webinar. I think it's safe to say that Ava Trade, Ava Social has a unique feature that can specifically assist beginners, not only beginners, but I'm just going to explain about it. You'll understand. So what Ava Social allows you to do, naturally being a social media trading platform, is to follow or copy another trader. Okay, and the reason that I said that it can additionally assist beginners, not only, is because if I'm a beginner and I'm not exactly sure what I'm going to do or how I'm going to do, which instruments to use and how to use it and so on. So I have a feature here, okay, in Ava Social that allows me to follow another trader. And by doing that, I'm going to get messages with the positions that he's taking. And it's for me to decide if I want to open a position accordingly. Okay, basically following his strategy. Now, no positions will be opened automatically. I'm going to get them as a message and I can decide if to to do it or not. But it's not automatic, okay, the positions. If I'm copying somebody, that's a different story. So I'm going to get the messages, yes, but also the positions will be launched automatically. Okay, later I can go to my accounts here, to the positions or to the history, and then I can verify, I can check what was happening in the account, but the trades will be done automatically. Now, the unique feature when using AvaSocial to do this is that you can also customize the difference between you to the person you're copying, okay, in the lot size. So in case that the account that you're copying has 100,000 and you're only with 10, okay, there might be a scenario that you're not going to have enough margin to do what the trader is doing. In this case, what you can do is you can customize the difference between the whoever you're copying to yourself, and you can say, I want the strategy to stay the same and the positions to stay the same, but I want the lot size to be lower, so my account can handle that. Okay, it doesn't have to be the minimum, but you can adjust it. Just go on the app and you'll see it very clearly. It's very accessible and easy to understand. Okay, that's about AvaSocial. So we have those. We have this platform we're going to carry on with. Let's just put here something like that. Okay, and then we can carry on with the interface in here, and then we can move on to the second part. So few things that I'm going to show you now will be only found on the web trader and not on MT4 or MT5. One of the features that I'm going to show you is called Ava Protect. Okay, to use Ava Protect, all you have to do is just basically click here on the box here or on the golden shield, and in a moment we'll go into understand the way that it works. Okay, so let's take gold as an example. We're going to click here on gold, expand the chart to see it more clearly. It's important to remember that when you're changing the current chart to something else, so let's suppose it was like this, right? And we are now changing it to gold. Just a second. All right, so we are back. I hope that the sound is still okay. Let's quickly check. The sound is great. All right, so as I was about to say, one thing you want to pay attention to when you're using this interface is when you're changing the asset from what it's presented right now. Right now we're looking at NZD yen. And if I would like to change it to gold, okay, so I would like to erase what's here, just click it and then go gold, click here on gold, then gold opens. Then I'm going to click here to expand the chart. But looks that on the right hand side it stayed on Kiwi yen, right? So what I would like to do is to either close this or click sell or buy, or just to click sell or buy, and then it will confirm the what's on the chart to be right here. Okay, otherwise it stays where you saw it with the previous instrument. Okay, so you want to pay attention to that so you won't accidentally miscalculate something. All right, now let's carry on with gold. We are about to look at Ava Protect, which is a unique feature we can find in this interface. Now, Ava Protect, what it does is it allows you to protect the position for a certain time frame. Okay, whatever you lost during the whatever you lost, you will get back. So you will get your losses back during the coverage. I wanted to put it in a way that makes sense. There's a question here. Sorry for me in English, it's complicated. Maybe I could come back at another time. You have recorded. Yeah, so Peter, what I said in the beginning, because Peter is, I'm guessing that English is not your primary language. What I would recommend you to do is go to our YouTube channel later on, and on YouTube you can translate, you can add subtitles, and you can translate it automatically. So you can go to YouTube and in the recorded version, change the language to what you speak. All right. So as I was about to explain, Ever Protect, it allows you to protect the position for a certain time frame, and whatever you lost during the coverage, okay, you will get back. And it's important to know that there is a fee when using the service. Okay. Now, if I click here on the box, you will see that something is marked. You see Ever Protect is marked, and then it lets me choose here the time. So let's suppose that I would like to, as an example, let's switch to days, just a bit cleaner overview. Okay, and now when I'm looking at days, let's suppose I think gold is going up, but of course it could also turn around. So what I'm gonna do is I'm gonna take a buy here, and I'm gonna protect the position until tomorrow. Okay, and I'm gonna take the lot size to the bare minimum just for comparison. And I can think that gold, let's suppose, will go $20 higher, right? And then I can also mark the stop loss for $20 lower, again, for the sake of the simulation. And what will happen in this scenario is very simple, guys. Okay, so in this scenario, what happens is I was aiming for $20 higher, or it already moved. Okay, let's bound the, okay. Let's take that. This is our stop loss. We'll paint it in red. Let's take that. That is our take profit. We'll paint it in green. Now let's understand those things. Okay, so to simulate this scenario for Avid Protect, I'm using the take profit and the stop loss. What they do is they let you mark a price on the platform that if it reaches that price, it's going to close the position automatically. This is why it's called take profit, because it closed the position and lets you take the profit. And the stop loss, it works the other way around. So it lets you mark a price on the platform that if it gets to that price, it stops you from losing more. So we have take profit to take the profit, and we have stop loss to stop losing more. Naturally, when I'm buying, my take profit will only be higher. Understanding my intention is that the value will increase. Again, this is when I buy, right? I want the value to increase. And if it goes down, that means that I'm going to have a loss. So my stop loss will be found lower than that. And if it would be the other way around, if I would be selling, my take profit will be lower, my stop loss will be higher, because my intention then will be that the value will decrease. Now, in this scenario, okay, we're going to pay a fee of almost $11, and our potential gain is 22.8. Our potential loss is also almost $22. And the way that it works is if it reaches the take profit, we're going to pay $11 and we're going to have a profit of almost $23. If it goes down, we're going to pay $11, but we're going to get back 21, right? 22. So this is super simple to understand. Anybody has any questions? Any questions about what I've explained so far? Any questions on the product or something else? What makes the Thank you, Kim. This is an excellent question. So, Kim, you're asking about the fee, basically what determines if it will be higher or lower. So, there is also a question from Ashfaq. Can you please explain overprotect once again if I have a loss? Yeah. So let me repeat that scenario one more time. And also let me recap what's going on here with the right side with the fee here. So in this scenario again, because we are buying just one ounce, and it's going to go from 26.76 to 2,700, which is $23 away. We can make $23, right? It's $23 away. We have just one unit. The price increases by 23. We're going to make 23 because we have just one unit. If it goes down 23, we're going to lose 23. Oh, this is 22. Oh, sorry. So if it goes down 22, we're going to lose 22. So potential profit 23, potential loss 22. And since we decided to cover the position here, as you can see, if I click here, it lets me choose the time. And Kim, I don't know if you noticed, but when I changed the time frame here from 1 hour, which was $4, if I increase, watch what happens with the fee as well, right? So we have 3 hours, became 6, 6 hours became just a little higher than that. 1 day is already almost double than that. Okay, but that gives me more flexibility because I'm going to get back the losses during the coverage only. During the coverage only. So one thing that has an impact on the fee is the time length. The other factor that has an impact on the fee is the lot size. Therefore, if I will increase this from 1 to 10, watch what happens with the fee. Now it's 100, now it's 1,000, and now it's, well, you understand the idea. So let's keep it as 10. I hope that this is clear. Do we have any more questions before we carry on? Any more questions? What instruments? Oh, thank you, Michael. This is a very good question. So, Michael, you're asking if this product is for everything. The reason, the answer is no, right? The product is for currencies, gold and silver. Okay, Forex, gold and silver. Maybe in the future it will be something else, but currently this is what we have. What will happen if I take 1 day protect and gold going down after 2 days? So this is another excellent question. Thank you. So as I have explained, this product designed in a way that you get back the losses that you lost during the coverage. But what happens if I decided to keep the position open and none of the stop loss or the take profit was triggered, which is a viable scenario? So what will happen is I will partially get the funds that I lost during the coverage, but if I keep the position open, I'm not gonna get back the remaining loss that I had. In other words, if I cover that for a week, cover that for a day, and I decided to keep the position for a week, the remaining 6 days that I've lost money, I'm not gonna get it back. Okay, really as simple as it gets. I can extend it for more, for 2 days in advance, but I cannot extend the coverage when it's done. When it's expired, the coverage expires. I cannot extend the coverage. I hope it helps, Mr. Bertram. Okay, I hope it answers your question, guys. We have to carry on. Okay, let's carry on. So there are a few things that I would like to show you. Let's get rid of that, and let's get rid of those. Okay, on the left side panel, we have some tabs here. The first one is for personal information. This one is for trade, positions, order history, signals, news, discovery, and additional platforms. Let's land here on economy calendar. Okay, and just to understand how it's constructed, just to be able to go through the fundamental analysis. All right, let me no, let's carry on with what we have here. I just would like to reset everything. Yeah, seems good. All right, so nothing here is picked as nothing here is selected. This is how it's supposed to be by default. As you can see, nothing here is marked. There are a few parameters here that allows us to filter it the way that seems that suits to our strategy. Now, let's go first understand how it's presented in here, and then we'll learn how to filter from the left side. Okay, so as you can see, the results here are presented, the numbers here are presented by previous, forecast, actual, and importance. Importance being how big the impact is going to be on the market. Actual is the final result. We're not going to have that unless the event has already happened. So let's scroll down. Okay, you're going to see there is a difference in color. Okay, this color is a bit more grayish. This one is more lightened. When it's lightened, it means that the event hasn't happened. And this is why also we don't have the actual being the final result. So obviously in events that didn't happen yet, we're not going to have the result. After it will happen, it go to that raw and it will turn grayish. Now, this forecast is based on certain numbers, and it's a certain prediction of a range that we expect the numbers to be. Of course, there's no guarantee that it will be the final result. There's not even a guarantee if it will be higher or lower, which makes this game very interesting. Now, the previous is the previous result of what happened last time. So what we're going to do, okay, just to understand how to utilize this, we have what happened last time. We have what we expect to happen. And then after the event, we have what actually happens. And in here, it's presented how important that is, how important the event is, and how fluctuative the market can be as it according to that, okay, as a result from that. Now let's suppose that we're not really bothered by all the currencies. Let's suppose we would like to focus on something specific. So what I can do is I can click here on the tiny arrow, then lots of flags fall down. Let's stay with the dollar. Let's suppose I'm mainly going with the dollar. I'm gonna click here on the box here. Okay, and then I can filter it even further. So currently it's showing me what's on the 16th, which is today. But let's suppose that I would like to see not only the events today, but for a week forward. What I'm going to do is click here on 16, then I'm going to click on 23, creating this light blue trace from here to here, as you can see. And then I can scroll down and it's going to show me not only the 16th, but a week forward. And I can also filter it by, as we understood, the impact. So let's click here on medium. It's going to show us only medium. And if it's high, let's unselect this. And then we have it as high. Okay, what else? Oh, in here, in the Magnify, you can search whatever you want. So if we go none, okay, it's going to present us by the name of the event. Okay, it's quite simple and straightforward. The most important thing here, at least for me, the most useful thing here is, as you can see here, there is a button here with a calendar. Now, since we're busy during the week, okay, and I don't know how much available time you have for you guys, but when I'm extremely busy, and even if I'm not, it's super comfortable to just link the event to my calendar, and then I have it as a message, and I don't have to remember when was the event specifically, even though I do. But you know, it helps me find the specific time to go to the chart, to do the analysis very specifically. And it's just, to my opinion, it's just great. Okay. All right. Let's deselect everything. Click here on reset. Now everything is back to ground zero. Let's click here on AvaTrade to go back to our original screen, and then to click on the two tiny arrows to expand the screen. And in here, we're going to erase everything. And instead of it, we're going to put the name of our instrument. Let's actually fall down. Let's get some inspiration of what we would like to analyze today. Maybe one of the Forex or the commodities. Okay. Situation in the Middle East is very, very serious, and this is why oil can react to that. Okay, let's have a look at what do we have here. It's not bad at all. All right, place some lines, have a more visual image for our analysis. Okay, great. Now, right now, it seems like oil is heading down, okay? And we can assume that oil will keep going down unless something fundamental will change that. Now, if we're looking at oil thinking it will go down, and let's suppose we're going to change that to a sell as well, we're going to change the lot size to the bare minimum just to simulate. We're going to enable the take profit and enable stop loss, and also enable the execute when price hits. We didn't speak about that yet, but we can speak about it now. The way that this works is we have three available pending orders in here: execute when price hits, take profit, and stop loss. Take profit allows you to mark a higher price if you're with a buy, and to automatically close the platform, the position when reaching the price. Stop loss allows you to close the price with a loss if it reaches, again, if you're with a buy, then it will be in a lower point, allows you to close the position with a certain loss. But since we are with a sell, things are working the other way around. Now, the take profit has to be in a lower position, since our intention now is that the value will decrease. Therefore, let's suppose we're going to reduce it by $1. Turn this to 69. Okay. And the stop loss has to be in a higher point. Let's make it actually 71. Okay. And now, let's talk about execute when price hits. So what that does, if other people here are using MT4 or MT5, I'm sure you are familiar with a buy limit or sell limit, right? Or buy stop or sell stop. Now, the way this works is exactly the same. Basically, what I'm using when execute when price hits, I'm actually telling the platform I would like to execute my position in a specific price. So let's suppose we're going to go for 71. We're going to change the numbers a bit. This, actually, let's keep it. Let's keep it this way. This one will make it this way. And that's just lovely. Now we have $2 difference, and that's perfect. So our target to enter is 71. Okay, which will be presented by a white line. The upper line will be the stop loss. The lower line will be the take profit. Okay. And now let's talk about how can we, just a second, how can we construct a position with a certain logic? So let's begin first with a bit of getting familiar with the interface in here. So in the upper left corner, we have the search field. We've already used that in the beginning with gold. We can erase, put here gold or something else. NASDAQ is an example. Click it, then it appears. Okay, and then if I go to the right, we have here the time frame. We can change it from this section is minutes. We have hours, days, weeks, and months. Let's keep it at days for the time being. If I keep going to the right, we have here the we can change how the layout looks like, if it's a line or it's candles. If I keep going to the right, we have here the crosshair. Currently, we have the default crosshair. We can click and move the screen, but we're not getting any information from the candles. To be able to do that, we have to enable the crosshair. Therefore, we're going to click here on the arrow, and we're going to click here on from no crosshair to crosshair, and then we are pointing on the candles. We have information. If I keep going to the right, we have here the layout. We have the general layout, what we have now. We can split it to 2. We can split it to 3, or we can have it on top of each other instead of side by side. If I keep going to the right, we have here the indicators. We're going to use it in a minute anyway, and then I will explain to you. If I keep going to the right before the buy and the sell, we have here the list, which allows us to capture certain momentum. If we want to have, again, a little more visible image of the scenario that we're analyzing, and then you can really use it as you like with your own colors and whatnot. All right. Now, how can we take advantage of the situation here with oil? So we've understood that this is quite a nice structure. You have to agree with me. This is quite nice bearish trend we're seeing here. Okay, bearish. If you guys knows the story, bear usually slam his opponent to the ground. This is why a bearish trend is a going down trend. Bull lift his opponent in the air. This is why a bullish trend is a positive trend. So this is quite a bearish trend we're looking at here. It was supposed to be here our red line, which, okay, maybe it had something else to do. Let's add it again. Let's add it again. All right. And now, when we're looking at the chart, understanding that it can go a little farther down, we can still have no guarantee. We don't have any guarantee that oil will proceed going down, especially to our specifically designed take profit. So, assuming it will go down, the direction is not really giving us anything unless we have measurement how far down it can go. Maybe it will go down just another 10 cents or 20 cents and it will turn around, right? This is a great example of something like that, right? As you can see here, we also had a bearish trend, similarly to what we're having here. Okay, in here as well. Okay, as you can see, the red structure, bunch of candles, and then it turns around. And I don't want to get caught when I'm taking a sell and it will turn around on me. So I need to have some measurement. Okay, so if it goes down, where will it turn around? Will it turn around here? Will it turn around here? Let's get this guy a little higher, maybe a little higher, and then we have another one. Now, the reason that I've marked those lines, those calls, is support and resistance. Support will be the bottom lines of my chart, presenting a certain level that I think will only be exceeded with fundamentals. Okay, that can be found in different time frames, bigger or smaller time frames. As you can see, I've put an oval around the points that I've marked to help you understand a bit better the reason that I've marked the support and resistance. Now, with this in mind, we can think that the further step down might be 69 or 66 or 65. But I want to open a position with a number in mind that I'm aiming for something realistic. Okay? Because if I'm planning to buy at 71, and let's selling at 71. Now let's suppose it got into here. Okay, the same. Let's go closer a little bit. Okay, this candle here, this hammer here. Okay, let's learn something quickly, even though I usually prefer to keep the analysis to the end. But I guess if I want to explain that, it wouldn't make any sense, and that might be a problem. Okay, so hammers are candles that constructed the way that I've marked with the ovals. You see the red ones, we have a handle, we have a head here, and can potentially hint for reversal, like happened here, here, and potentially can happen here. Now, since it's been followed by a bearish candle, even though the day is not done yet, it might change, still it can be part of a structure. Okay, now how will I know at what price oil will move, will turn around? So of course nobody on earth can know that, but we can estimate how much it can move. And how can we do it? One way is of course to look at the previous candle. Okay, and then we say, okay, yesterday as an example, we have open, close, high and lows. So the open in this case is 71.64. Close is 71.04. High is 71.96 and low is 69.71. Now, if I take those numbers and I subtract the open from the close and the high from the lows, we already know that this one is 60, right? So we have less than $1, and in here it's much more than that. Okay, and we can assume, okay, if it moves this way yesterday, it might move like that tomorrow as well. But the problem with that is if I'm only going to take one candle, it doesn't stand for any average, it just stands for itself. So to be able to grasp an actual average, I have to take many more candles and actually sum all of the results and divide them by the number of candles that I took, which can be frustrating and time consuming. But thank God, because we're in 2024, we have an indicator we can apply and save ourselves the time and frustration not to do manual check. Is just to fold it down, click here on FX indicators, where it says type to filter, type AVE for average true range, click and drop, drag it to the right to this frame. In this frame, we have certain settings we can apply. We have Wilder simple weight and exponential. Let's keep it as Wilder's for now. In our length, that we actually determines how many candles we would like the ATR to analyze. So instead of us taking every candle and jotting down the open, close, high and lows, that does that for us automatically. Does that automatically. And it's based on the time frame presented in here. Therefore, if we're looking at days, 1D days, and it's 14, it will be 14 days. If this would have been weeks, it would have been 14 weeks. If this would have been months, a little more than a year. Anyway, you guys understand the point. Let's, for the sake of the discussion, keep it as 10 days. And in our color, so we won't be confused, we'll change it to our lovely mustard and click save. Now, when I'm looking at oil and I understand it can potentially go down, now I have a measurement of $2. How surprisingly, it fits perfectly to the target that we placed. Now, let's see how we can construct it to match to our ambitions. Now we know that the numbers make sense, but we don't really know if this will match what we want to achieve. Because I see here the result is $20. Okay, so potentially holding this position for a few days just to make $20, I'm not really sure I'm happy with that. Okay, so let's put here, first of all, crude oil. which is what we're analyzing. And now let's set a real target, a real time, some real movements, price difference, and then we have your units. Okay, so using this formula, let me reissue this position just as easy in the next time with different averages, of course. And in here, I'm going to put a quick equation here. Movements times units equals target or summary. Okay, or target divided by movements equals units. Now, in our target, something more reasonable to make per day will not be $20, but let's suppose maybe $300 or even $200 will be fine. Okay, and in the time length, let's keep it 1 day. In our movements, let's jot down the ATR. ATR presenting the actual average true range for the past 10 days, according to this indicator, average true range. Okay. Okay, ATR is $2. And in our units, we have to find out the units. So let's use the equation in here and let's divide 200 by 2. How much is 200 by 2, guys? I'm gonna give you 10 seconds. 9, 8, 7, 6, 5, 4, 3, 2, 1. Very, very good. Max, everybody, whoever wrote 100, you're correct. And now let's put it to the test. Okay. For any people who has any doubts, okay. Now let's put it to the test. In here, change it from 10 to 100, just adding here a 0. Of course, this would make pure sense, perfect sense. So this is 100, perfect. Let's now carry on with the position, see what we're missing. But let's recap what happened here quickly. In the beginning, we saw that oil is heading down. It seems like a nice direction, just rough analysis. Assuming it will go down, we would like to place some take profit and stop loss. But how will we place them? So, analysis-wise, we're looking at support and resistance, see if there is anything before that. And we see that it's, well, farther down. So I wouldn't want to aim for something too far away since we're looking at days. And in the stop loss, the more I will extend it, the more I can potentially lose. So hypothetically, if I would aim for 78, it would be like this. That I could potentially lose $750. And you really like that, right? So the closer it is, the less I can lose. But I need to pay attention to that as well, because if it's too close, it might get triggered and move to where I want it, which nothing can be more frustrating than that. So we need the take profit and the stop loss. You must find a sweet spot and to land it not too close, not too far, just in a manageable place, allowing you to get to the target. This is a fabulous way to simulate the targets, by the way, to simulate the potential profit or loss. On MT4, MT5, you have to do this manually. Okay, but in here, when you're placing the numbers, it's already showing you by increasing or decreasing the potential result, which makes things very convenient. All right, now we have take profit, we have stop loss. It seems reasonable. This is 2% out of my balance. To verify this, I can go potential loss divided by balance equals X, and then X times 100 equals exposure. Therefore, if I'll go 200 divided by 10,000, I will see that then it's 0.02. Let's do it with a calculator. So again, 200 divided by 10,000 Then I multiply this by 100, which gives me the 2%. Okay, great. Seems fine. Risk money management wise, it seems great. If I would want to reduce this to 1%, I could do one of two things. A is getting my stop loss closer to the entry. B is just slice the lot size by half, but then it has an impact on my profit as well. So let's keep it like this. And the last thing that I would like to verify is that I have enough money to carry on with the position, to open the position. And for that, we're going to write down a few numbers. Okay, so we have price per unit. The price per unit is 70.07 for a sell, 70.11 for a buy. Let's keep it this way for now. Okay, since it's moving anyway. So we have price per unit times units equals value, and the value is 7,000, right? It's also written here. You don't even have to do this, but I'm just showing you so you'll understand the logic of what's happening here. Then we have the leverage. The leverage is 1 to 100. So 1 to 100. And what it does is it multiplies buying and selling, meaning that my account will behave as if I had 100 times more than what I have now, keeping in mind that to comply to that, I need a certain margin impact. So instead of really need $7,000, I can divide this by my multiplier, right? Since I multiplied, I can just divide the value by the leverage. And then if I'll go 7,000 divided by 100, it's 70, right? Again, for the skeptical among us, okay, very, very simple. And now, of course, I can take this position. I can take much bigger position than that. I can even take 1 lot, no problem. I can even take 10 lots, and so on and so on. So guys, any questions before we say goodbye? We have another 9 minutes. 9 minutes that I can give you answer to your questions, guys. Use it while you can. Any questions regarding the process or what I've explained now? Any questions at all? Right, we have a question from Jill. Can I apply this to all my instruments? Yes, of course. Of course. The idea here, Jill, is that you can just erase whatever is here. Okay. Just erase. Oh, sorry. Let's keep it this way. So just to share with the audience, Jill is asking if this can be applied on other instruments as well. The answer is absolutely yes. Let's just get rid of this and get rid of that. And this can work. It can work exactly the same thing with any other instrument. Therefore, if I would be analyzing gold or something else, let's suppose I would be analyzing Apple as an example. I don't have to change the target, could stay 200, could stay 1 day. The units, I don't know, I'm gonna check that. I'm gonna apply the ATR, just gonna switch quickly to Apple. Okay, see, I already have it. Yeah, just adjusting whatever I need to adjust. And I can have a, this segment here, you can just put it down in different times. And yeah, of course, you can apply it with everything else. Any more questions, guys? Of course, the leverage will change to a different instrument since the leverage is individual. So my leverage with Apple might not be the same leverage that I have with crude oil. Okay, any more questions? Shaquille, you're asking what I recommend to trade, but you've already, if you've been in the previous webinars, you already know we're not supposed to say that. Okay, to recommend what to trade, but I can tell you that you can find a lot of inspiration if you visit here the news section. Not the news section, that as well, but underneath you have here the discovery. If you go to Market Buzz, you can see all the popular instruments, all the popular stocks that was mentioned recently, and you can pick whatever you prefer. You know, depending on popularity or whatever you prefer, you can see the. Okay. I hope it helps. Right. We have a question here from Sianda. How to spot confirmation for entry. Okay, so just to verify for the dear audience what confirmation means and how it can help with finding the entry. Just a second. One more thing I have to tell you guys. The way that I constructed the chart is to fit to my eyes, my analysis. Okay, if I keep the chart as it was, so let's take something else like this, and I analyzed it this way. Okay, and I'm looking at 1 minute, right? So what exactly can I understand from that, right? This could make a lot of sense if I am scalping, as an example. Okay, there are three trading styles, three major trading styles. We have scalping, we have intraday, and we have swing. And now it's important for me that the chart will be in a point that I can analyze and it matches to what I'm planning to achieve. So my analysis would actually make sense, right? If I'm planning to swing, this will give me nothing. But if I'm planning to scalp, this will give me nothing. Why? Because in scalping, I want to open many positions, open and close many positions fast. And in here, when I'm looking at months, okay, think about how many, this is 1 month. So how many weeks, days, and minutes there are here? There is nothing to understand from here about scalping, right? I have to go to the time frame that makes sense. Okay, now what Yanda has asked regarding the confirmation. So confirmation can be done in several ways. Let's go back to days. Confirmation can be done in several ways. Okay, one of the ways that I would like to do it, just a second. Okay, is by completing a structure. What do I mean by completing a structure? So for instance, if I get another hammer like this, and then I have something that, where can I find it? Okay, we don't have it here. We don't have it here, but there is. Oh, there we go. You see this one. Okay, this candle here looks a bit more like a dragonfly than a candle, right? And the way that this works is after this kind of candle, I can expect a reversal, potentially. It's not a rule, okay? It's not a rule. As we saw, there are exceptions. But if I'm looking at the average that we took, the $2, and it gets to this level, okay, the next support is at 20. It is at 66. That's $3 away. So as you can see, similarly, it happened here, right? It turned around, but it's not the same type of reversal I'm referring to. This is not. This one is the same. This one is not really. this one is more specific. Okay, so to determine confirmation, you need a few steps to happen. One candle or two candles might not be enough. You need a full structure. You need at least 3 or 4. Okay, again, this is for my own training. Of course, somebody can say one candle is enough to do analysis. I'm not really a big fan of that. Okay, I like a structure, so if I'm looking at 4 bearish candle, I need something that will potentially show me it's going to turn around. Okay, this could have been potentially a key for reversal, but as you can see, it didn't reverse. Okay, only if this will end up higher, and then the following day will be vice versa, we can think that it might be a beginning of a structure. But if it keeps going down, I have no reason to believe it will turn around unless something fundamental will happen. Okay, of course, if it turns around and it begins, as you can see here, begins, this is already the second, right? I hope you guys understand that. Okay. This one is not really, let's get rid of that. Okay, I don't really know in which other way to show it, but I hope it makes sense. Okay, so after you see the beginning of the structure, you can think about an entry. Like I said before, using the execute when price hits can really help you find the price while you're away from the computer. So you can state, okay, if it potentially turns around as I expected in here, in 69 or something like that, I can place my entry at 69, and when it will get to it, it will launch the position automatically. All right, guys, our time is up. I hope that you've learned several things from this webinar. I hope that it wasn't too fast. I was really trying to go with ordinary pace, but still give you as much content as I can. I wish you all best of luck with trading. Come visit us once more and have a good day.